All right. Um, let's take a look at some markets. In particular, I wanted to take a look at basically some turning points. All right, so take a look at crude because this one I was ready for. I saw it and it was good. All right. So you see over here, the market is setting up. What's it setting up for? It already did a breakout, then it did another breakout, right? And over here, the thrust shortened. So I knew it was about to pull back, right? Over here, you see from this high, market makes a high, then breaks out. BO, BO, BO is obviously breakout into a higher high, pull back some, and then here the thrust shortened. So this was very interesting to me, and also the fact that the volume spiked on this day to the biggest volume in 48 days, and so it's very strange. You know why it didn't have like more fall through to the upside. So it's just ready to pull back to test. So I'm looking at this breakout bar right here, and he was gonna go back into it. All right. So then what also was really nice is it's a very orderly pullback. So let's take a look at the 60-minute and the 15-minute, and you see the way it's pulling back from that high. After it made that high, this was the change of behavior in the hourly, like right here. All right, that's the selling, and this is the climax. You will see this so many times. I'm like convinced that this is not a pattern, it's a principle. All right, there's a big difference. All right, so you see that this is the climax, right? The biggest volume and price action, 41 waves, followed by the change of behavior, and this is the hourly chart, in 18 waves. So I'm like, oh, okay, so it's pulling back. Bing, 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 bing. It's pulling back, has some breakdown, test the breakdown, or blah, blah, right? Does all of that. Goes into the spring position. What the hell happened to the SP? Can you believe this shit? I don't know where it went. Um, I don't know. But this was in a spring position. It's supposed to be there. I don't know what happened. Anyway, so it's going down, ding, 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 right? It keeps going down. And then I'm starting to look at this 15-minute. And what really sticks out like a sore thumb is, I'm only looking for just some buying, right? Because obviously the trend is up. It's in a spring position. You could use other setups like test of the breakout. I mean, it's the same thing. Here you have a breakout and you have a test of the breakout. You also have the test of the breakout in a spring position. So just, whatever your level or whatever it is that you're looking for, then you got to look at the behavior that's happening there, right? Because a lot of times you won't get springs. So if you see the move in crude, there's no there's no spring. It just pull back, breakout, higher high, pull back, breakout, higher high, pull back, breakout. Finally, it goes into a spring position. All right, so whatever. So okay, so now I'm watching the pullback on. What the hell? I'm watching the pullback on what? On the hourly and the on the 15-minute, and you see the selling pressure very clear. It just goes back, 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 right? And then bang right here. So this is the biggest volume in 49 waves, biggest move in 15 waves. What is that? It's the numbers tell you it's clear buying pressure. Yeah, just clear buying pressure. So someone's buying the pullback. All right, that's it, and that's what it means. So you had selling, right, and that initiated the pullback. Came down when it went to this level. It would try to go down once, try to go down twice, and then it rallied, and that's just buying pressure. So that's all. When you're looking for buying pullbacks, what are you doing? You just look for buying pressure that comes at certain key levels, and then you have your entry protocol. So here, what I knew was that these tops, fucking top here, 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 all four. 1, 2, 3, 4, all taken out. And what all this volume and all that, you can see 1, 2, 3, 4 bars in a row. Only one red bar, one green bar, only another one red bar, and then bang, crack those levels. So what's interesting about this is I want to quantify the volume. And so I look over here, and it's 100. So 100 is what? 100 times, I think it's 100 times 1,000. I'm not sure what I did, but it's 100, I think it's 100,000 on this buying wave right here. So it's a very, very bullish sign. And what I also like about it is that it had some kind of base. So I was looking at that. I don't know what I divided by, but this little base right here, it's from here to here, there's a little base and breakout. You don't need that extensive range of phase A, B, C, D, but you do need it. You should have a base. You don't need, again, I repeat, that extensive range, phase A, phase B, phase C, phase D, is bullshit. All right, it's all fictitious. All right, if you don't believe me, go try to check how many charts don't have that. It's just over analysis, and you won't be able to trade if you use all that. What you should have is a couple of up and downs, which create a base. All right, and that base is, you have certain indications in it. I mean, for example, if you want to see where the spring here is, right? You see this little low right here? Yeah. That low is actually a minor spring, which to me, the way I'm reading that is the market tried to go down and failed to go down, and buying came because it failed to go down, could not go down. It just tested and reversed. But that little thing is a spring. And the other thing is, when it rallied, it did it on good momentum. 1, 2, 3, 4. And it didn't give volume. So, I mean, what else do you need to know? It's very clear, buying pressure. How am I quantifying buying pressure? Volume, right? So, I mean, if you're going to use all those analytical tools and it's not that complicated. It's buying pressure is based on price and volume. The volume here clearly sticks out like a sore thumb and is the biggest since the sign of weakness, right? And on top of it, the biggest in volume and price action, and has a little base coming from a minor spring that takes out 1, 2, 3, 4, 5 highs. So that's buying pressure. Now, one thing you have to be careful of is that buying pressure doesn't just mean that it's buying pressure for the sake of new buying to create a trend. It could just be short covering. All right, so that's when it gets tricky, because buying could be for the purpose of legitimate buying and turning the market around and rallying and trending, or it could just be short covering, and in that case, it's going to get sold to make lower lows. All right, again, if just because you see what you think is a sign of strength, that sign of strength could just be short covering. That sign of weakness could just be profit taking. So they are, you have to see how the pullbacks respond and all of that. And can the market hold? Is there cause that develops? Is there a base? All those indications will tell you. From this perspective here, it took out 1, 2, 3, 4, 5 highs, and it actually still hasn't taken out the higher high here. I guess it's just, Friday they did short cover their shorts. So this could be short covering. It could go lower, but who cares, right? It gave the pullback perfectly because maybe they were just covering the shorts on Friday. And it also gave a little base and then rally and then pull back to test and whatever. So what did I do here? One second. Shit. I don't know. All right. So, damn. Anyway, this is the part I hate. If you do all this crap, every platform has issues. All right. So here is the magic. So now what I want to do after its rallies, I want to see where it can pull back and stop, right? So many people just use the Fibonacci retracement or some average or VWAP or magic pill. But over here, what you notice is that when the market breaks out, you have these two dots here. This is the biggest volume in about 100, and the following one is even more volume. And this is the volume within this breakout bar. So within the breakout bar on the 15-minute, these two bricks have excessively high volume. And guess where the market goes? When it pulls back to that exact area and rallies. So what am I trying to say here? I'm saying that when you're looking for the market to pull back and test, a lot of times you might have a bar, but it's a big bar and you don't know what's in the bar and where exactly is the point. In that case, you want to go to a lower time frame and identify that high volume buying, because that's the area where the market will come back, pull back and test and then continue. So here, and yes, that's my opinion, but if you see I mean, there's just a tendency for the market to do that. All right, see, like right here, ding ding, come back exactly, test the ding ding, and continue higher. Right? Even now, when it comes back, like this brick right here, actually it's the weekend, so might not do it. But um, anyway, what I'm trying to get across is that when you have breakouts or breakdowns, you want to see the points within them, because the points within them, especially the high volume areas or levels within the breakouts, that's typically where the market will come back to test. And what that does, it gives you it gives you what they call a sniper entry. Well, this is one way of doing that. You know the exact spot, right? That's very probabilistic. And that's where the market went, and it went up. That's it. All right. The other thing to note is this trade means nothing without some type of base. Now I'm saying base, and that's different than an extended range with over analysis of ABCD and doing all of the imaginary work. It's just a freaking base with a count. All right. You take the count and you project. All right. One, two. I would just take the count and project back to you. So cross this level. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 1, 2, maybe one more brick. So it's that's all. All right. Have a wonderful day. Bye.